Welcome back. Well, we're still tracking what's happening at Reliance AGM. An important flash at the bottom of the screen wherein they're talking about more R&D in their businesses. Technology, something which is first for them, and trying to make a greener tomorrow is what they are really focusing on, and lots of other important announcements as well, and we'll keep tracking that. But for the markets right now, there's a bit of a sell-off that has happened. We were at the highest point, we had scaled a fresh high, but from there we have given up quite a bit of gain. In fact, we are in the red right now as we speak. So 25,150 thereabouts is where we were. We have managed to scale down from those levels, and ditto can be said for the Bank Nifty as well. From the frontline index, it's Grasim which is down, JSW Steel, Hindalco, so some of these metals and commodities are coming under pressure. You also have Tata Steel which is down 1.5%, and M&M2 is down and out. What's holding up, of course, is Reliance. That bonus expectation is something that's keeping that stock afloat. And you also have Bajaj Twins which are doing quite well. In fact, they're off the highest point, Aisha, but nonetheless, there's gain of almost 2% on Bajaj Finserv and Bajaj Finance.
Yeah, they've been quite the mover, along with Reliance pushing the index higher. Britannia is looking good. HCL Technologies, after its analyst day, has made a decent move. And of course, PFC sees another 2.25% of a bump up from within the liquid universe. In fact, let's bring on board Kunal as well as Naresh and find out what they're making of the market so far. Kunal, irrespective of the moves on a Bajaj Finance, Finserv, Reliance, it's not really, replicating or bringing about any effect on the index. Still pretty quiet and consolidative. Preparing for another move higher, you think?
Yeah, potentially it should, because I think what we've seen over the last 3 days is expiry-based volatility, because there are no major signs of indices going into any kind of a breakdown, except for those intraday breakdowns after the Nifty rallies up 40-50 points or so. You see a reversal of those 40-50 points, and the index corrects and comes back towards negative 20-30 odd range. So these are very minute kind of gyrations on the index, and that generally happens when there's a lot of pending rollovers on the F&O side, and especially on the expiry week. So I would probably believe that till the time we don't break below those key critical supports, 24,700, 750 for example, I think we should maintain the long stance as well as the long bias for the indices.
Yeah, it is the day of the monthly expiry as well, so there will be that volatility that will come into picture in the last 30 minutes as well, but it's last 1 hour of the trading session. Where do you envisage, Naresh, the expiry will happen, and are you excited at all by the kind of move today at least the Bank Nifty tried to show earlier in the day?
So Bank Nifty in the day tried to do a bit of a move, but overall we are still struggling in terms of momentum across the board. We are just around that 25,000 mark on the Nifty, on the Bank Nifty around that 15,300, 400 mark, and not really making a strong move. Watching out for 15,500, 51,500, 51,600 to sustain, and maybe 25,200 to sustain. Then we get into a momentum. But till that point of time, we are still in the struggle. Today's volatility is thanks to the monthly expiry. We've seen a quick 100-pointer downtake, then some recovery. But we could get a better trend understanding from tomorrow.
Got a bit of a patchy line there with Naresh. But in the meantime, let's also address the laggards today, because it's such a dwindling market. We've seen a sudden sharp nosedive, and now just about lying quiet as we speak right now. What's not working well today? L&T, that's down about almost 1%. And metals, after a decent day the past 2 trading sessions, they are the ones which are currently down. So both Hindalco, Tata Steel, they're at least the key pressure points today. Kotak Bank, Adani Ports, Infosys, TCS, HDFC Bank, ICICI Bank also not doing a whole lot. Kunal, specifically on the Nifty Bank, what kind of a move do you foresee?
So I'm expecting the move to be a bit more plateaued for the banking index, because there's nothing major in terms of the within the sector moves, because ICICI Bank is the only stock which is showing signs of strength. So even if you do a relative price comparison, the likes of ICICI Bank, then compare that with HDFC Bank, Kotak Bank, Axis, and all 3 of these stocks, other than ICICI Bank, are trading sub their respective 50-day moving averages. There are no major pickup in terms of volume trends for the stock. IndusInd Bank is trading below its 200-day moving average, so that stock is also significantly underperformed. So I would probably believe that we are at a point where only one of the stocks from the private sector banking name is leading the charge. Even from the PSU banking lot, I think the likes of SBI, Bank of Baroda, there are no major signs of trend positivity which has come back into these stocks. These stocks have retraced by 15% broadly from their 2-month, 3-month swing highs, and volumes are lacking in any kind of a move on the upside whenever the stocks show signs of an uptick. So I think that's one of the major reasons why I would probably believe that the bank Nifty would also tend to just about underperform or remain into a sideways range.
Okay, underperform or sideways move. That's the view as far as Bank Nifty is concerned. But IT as a pack has been fairly excited. So you do have Birlasoft, which is doing quite okay. HCL Tech after that analyst day, and the opportunity of a double-digit growth is something that had the street excited. LTTS post its analyst day a couple of days ago is still going strong. In fact, we had a conversation with Abhishek, the analyst at JM Financial earlier, and he was talking about how perhaps the worst is over, the sector has bottomed out, and there is the expectation of a recovery. His top bets within large caps were the likes of TCS Infosys, because he was expecting a recovery of BFSI to play out, and within the broader markets, Persistent and KPIT. In fact, here out a slice of that conversation.
Among large caps, Infosys and TCS have higher exposure to US banking, so they will benefit more. Wipro also, given its exposure to consulting, because of the Capco acquisition, also is indexed to BFSI improvement in US. So these are the three large cap companies which I think should improve from the banking uptick. In mid cap, yes, the valuations have run up, so it is prudent to have companies where there is strong earning visibility, and on that parameter, Persistent Systems and KPIT are our picks. Despite higher valuation in these two companies, the earning visibility is strong. The deal wins, etc., have been very, very consistent.
Right, okay, that's the take coming in on the IT pack. Couple of other buzzers as well today. Look at a Jana Small Finance Bank, for instance. Investec has initiated coverage with a buy target price of 725 in the stock, which is also indicating another 22% of an upside from the current levels. The stock, of course, has petered down since then. This PNB Housing, where an Axis Cap maintained a buy, up the target price to about 1,070. And then, of course, HCL Technologies, like we've been flagging off, they're aiming to increase their bookings run rate to about almost $2.3 to $2.5 billion versus the $2 billion at present. And they're pretty hopeful and seeing a demand revival in the BFSI segment is what they indicated. Other than that, of course, there's Vodafone Idea as well. The Supreme Court has finally agreed to hear VI's AGR curative petition come tomorrow. So that stock has been a mover from the word go, although petered down and given up some of its morning gains, dipped a little bit and then recovered again from there. So a bunch of these stocks are the ones which are a little bit active in trade as we speak right now. But Kunal, specifically on metals, because it's been a bit of a volatile ride for the metal index per se.
Yeah, I think except for a few of the names like JSW Steel, Hindalco, I think did pretty well over the last 1 month, moving from sub 600 levels to 700, 710, which it tested a couple of days back. JSW Steel is on the verge of a breakout of its previous highs, just about that 960 plus mark was the previous major swing highs for JSW Steel. So that stock is another, I think, 3% away from its previous highs. But then there are a series of underperformers from the metal pack. For example, the likes of Tata Steel, SAIL. I think these stocks have corrected by 20% broadly from their previous major swing highs, and they're still not finding any major buying or momentum into these stocks, which means that what we could probably be depending on is the stronger or the leaders from the metal pack which have shown price outperformance. They could continue to move up on a stronger note. I would believe that Hindalco and JSW Steel could become good candidates of buy on dips, and even if these are, there's a correction of 3% to 5% broadly from their previous swing highs, that should be taken as an opportunity to buy. SAIL as well as Tata Steel, I think one should wait out for those breakouts to happen. My sense is 140, 143 is the breakout range for SAIL on the short term basis, and closer to 160 approximately for Tata Steel. So till the time these stocks don't show signs of a breakout, I think one could just keep them on the radar, keep on tracking. But the leaders, the likes of JSW Steel, JSPL, Hindalco, I think they are the ones which could probably lead, continue to lead.
Okay, so that's the view coming in on metals at the moment. But let me also, hear out what the management of KC had to tell us earlier. That stock is fairly active today. Of course, it's reacting to the news flow of further order wins coming in from Middle East. But we did have a conversation with the management earlier yesterday. They were talking about that there are issues and challenges with respect to certain executions and labor shortages, but they're holding on to their guidance. Hear them out.
The issues on labor and all are still continuing. So I think had that not been there, probably we could have looked at something more. But I think we'll wait for some time to decide whether we can do more or we will stick to. Right now, I think I'll stick to my 15%. As far as commodity volatility is concerned, I think we are, I'll say, more or less almost fully hedged. So I don't see commodity volatility playing against us at the moment. QIP, we have been looking at it saying that we need to raise some money to either build a war chest for acquisitions or also for strengthening our balance sheet. So we have to still decide what needs to be done. It's right now an enabling resolution which we had passed and which got approved last week by our AGM. Now we'll decide what needs to be done.
Right, that's the word coming in from the KC International Management. In the meantime, let's just look at some of the other names which have been active. We've been talking about as to how Balrampur Chini has been a laggard today. HAL also is seeing a little bit of a dip, about 3% lower today. Aarti Industries, Ipca Lab, MFSL, these are some of the laggards from within the liquid universe. And of course, within the benchmarks, it continues to be banks and metals, which are the ones which are weighing heavy. Sandeep Sabharwal as well joins in on the show right now. Sandeep, hi, afternoon. Waiting for any material announcement from the Reliance AGM. So far, it's only a 1:1 bonus that they're going to be mulling on September 5th. Other than that, what are you anticipating to hear from the AGM this time?
I think the Reliance chairman has been making a lot of announcements, so all of us have been hearing them. Besides that, I think what everyone expects at every AGM is that they'll come out and declare demergers, IPOs, etc. of subsidiaries, which they don't do normally, and it's unlikely that it'll happen also because if they are giving a bonus, then it's unlikely they'll be doing any demerger, etc. So I think things continue as normal. So I think every results, they come out with announcements on what their plans, etc. So the Reliance AGM gets a lot of attention, but I think it's business as usual, I would think.
Coming in on Reliance Industries, but IT as a pack has been fairly active as well. But before all of that, GSPL is one stock that has been doing quite well for last 9 sessions. That stock has been gaining. So let me put the spotlight on that and get on board Somit to talk to us about just that. Somit, what exactly are the triggers that's keeping this stock afloat?
Well, GSPL share prices are trading at a record high and the stock has been gaining for the 9th consecutive session, which is the longest gaining streak for GSPL since November 2020. In the past 9 sessions, the stock has managed to gain nearly 32%. Now, to understand what has been fueling this rally, we first need to understand what GSPL does. Now, GSPL is the 2nd largest gas transmission company in India. It is considered as a lifeline for gas-based power plants in Gujarat. Nearly 80% of the gas consumption is been supplied via the pipelines of GSPL, and it also supplies gas to city gas distribution companies, refineries, fertilizers, steel, chemical companies, and for many others. Apart from this, it also owns nearly 54.2% stake in Gujarat Gas and nearly 27.5% stake in Sabarmati Gas. Now, of these two companies, Sabarmati Gas is not listed, but Gujarat Gas is listed on the stock exchanges. Now, Gujarat Gas's current market capitalization is close to 42,000 crore rupees, and the 54.17% stake of GSPL in Gujarat Gas is valued at close to 22,700 crore rupees. Now, given the fact that it's a holding company structure, there is some holding company discount that has been assigned by the street. Now, if you assume a 25% holding company discount, then the value of GSPL's stake in Gujarat Gas comes down to nearly 16,000, close to around 17,000 crore rupees. At a 50% discount, it comes down to around 11,300, and if you assume a 75% discount, then the value comes down to close to 5,665 crore rupees. Now, this translates to a per share value of around 100 to 301 1 rupees for GSPL, which means that nearly 24 to 72% value of Gujarat Gas is assumed in GSPL's share prices. Now, for the standalone business of GSPL, for FY25, analysts are expecting an EBITDA of close to 945 crore rupees, and for FY26, they are only expecting a increase of just 3% to close to 977 crore rupees. Now, the standalone business of GSPL can gain on the back of higher volumes or lower tariffs, but at this moment we are not seeing any signs of both these factors playing out. So the only thing that could have been leading to this rally when it comes to GSPL's share prices is the reducing holding company discount of Gujarat Gas in GSPL's share prices that could have been leading this rally when it comes to GSPL's share prices currently.
That's GSPL hitting record highs and the reason why. We'll take a very quick break, come right back. We'll cut back to the Reliance AGM.
Pick up right where you left off whenever you are ready. It's all about making TV work for you.
But that's not all. We're elevating digital entertainment with advanced interactive features. Imagine watching a live cricket match or the Olympics and being able to pull up stats, buy tickets, or switch camera angles, all without leaving the action. That's the power of JioTV Plus.
JioTV Plus is also designed to be a truly social experience. With integrated social features, you can share what you're watching with friends, join live watch parties, or discuss your favorite shows in real time. This is the future of TV, and we are excited to bring it to your living rooms.
Now, let's talk about AI. Our chairman introduced the concept of connected intelligence, where AI services and data are seamlessly delivered from the cloud over ultra-fast broadband, accessible anytime, anywhere, on any device. Today, we're excited to talk about a new service that we are developing that makes using AI as easy as making a phone call. We call this service Jio Phone Call AI, which lets you use AI with every phone call. Jio Phone Call AI can record and store any call in Jio Cloud and automatically transcribe it, which means automatically convert it from voice to text. It can also summarize the call and even translate it into another language. This allows anyone to easily capture and access important voice conversations, making them searchable, shareable, and understandable across languages, all with just a few clicks. Let's dive into the experience to show you how simple it is. Imagine that you are an important phone call. Jio has given a separate dedicated phone number to Phone Call AI. Just add the Jio Phone Call AI's phone number to your call, just like you would another person. Once you hear the welcome message, press 1 to start recording and transcribing the call. Now you can begin your conversation.
In the background, Phone Call AI listens and turns everything you say into text, quickly and accurately. And Phone Call AI will periodically announce that the call is being recorded. So everything is clear and transparent to all the parties on the call.
At any point, you can pause the transcription by pressing number 2. For example, if you are discussing another topic, Phone Call AI will periodically announce the transcription is paused again for full transparency. Simple, right? And when you're ready to start again, just press number 1 or press number 3 to end when you're done. And that's how easy it is to use Jio Phone Call AI. It's hassle-free, no apps needed, just a simple, reliable phone number to record and transcribe your calls with precision. Whether you're in a one-on-one call or a group conference or even just making personal notes, Jio Phone Call AI can be your go-to solution for seamless call recording and transcription. Another exciting aspect of Jio Phone Call AI is the inclusivity it brings to millions of our citizens who are hearing.
Okay, so that's the Reliance AGM. We'll keep tracking the important events that come out of that. But for the markets, it's important to track that as well because it's the day of the monthly options expiry. And ahead of that, there is a bit of a bout of volatility which has come in. We have given up most of the gains. In fact, we are at the morning lows itself. And that's the, flavor of the day today. However, having said that, it's Whirlpool, which is up 7.5% right now. So that stock is in focus. You also have Finolex Industries, Concord Biotech, Godfrey Phillips as some of the names which are in the green. PNB Housing is doing quite well. That stock is up 5.5% after that Axis Cap report as well. Though on the losing side, of course, you have stocks like Wellspun India. There was a large deal, or Wellspun Living that happened on that one. So that stock is reacting to that. Tata Elxsi had seen a massive run up for the first 2 days of the week. Yesterday it saw a bit of a crash, and today as well it's continuing with that decline. And then Titagarh Wagons, GIC, Data Patterns as some of the other names on the back foot. But we did speak with the management of IHCL earlier in the day as well, Indian Hotels that is, and they were talking about the expansion plan that is lined up. Before I bring in that conversation, Naresh, a view on Indian Hotels. Have you been tracking that stock?
So the stock came very close to a breakout, but did not see a strong follow-up action in the last 2 sessions. So hit a new all-time high, but there has been no follow-up price action. The trend still remains positive. Momentum is not great. So it still be a buy with a stop loss at 630. And say further, if it sustains 670, it could be a sharper move.
Levels to track, but here out what the management had to tell us earlier in the day.
5 gateway branded hotels. 2 more will come over the next 3-4 months, which are undergoing renovations, and there are 10 more in pipeline. So all in all, we would have around 20 hotels within 18 to 24 months from now under the gateway brand, which is really the right way to start a brand, and not just 1, 2, 3 hotels. And after 3-4 years, you have a portfolio of 5 or 7. So in 2 years, if we have 20 plus, yes, then gateway has arrived. So I think given the demand patterns being favorable for the sector, given that our not like-for-like growth continues on a very strong pace, opening more than 2 hotels a month, I think the combination of that should help us achieve a double-digit top-line growth for this financial year also.
Okay, that's the take coming in on Indian hotels, but just take a look at what the markets are up to, because you've seen a sharp recovery actually take place. In fact, the last, 1 hour or so has been quite volatile for the equity markets as well. A quiet start, picked up in the day, scaled up a good 170 points from the day's lows, and then again a big dip down, and now again a recovery which is coming by. 2500 is where, 25,100 is where we're currently at. Kunal, what's leading the recovery or aiding it?
Well, I've not seen, but I think it's small bits of recovery across the larger cap names. For example, Tech Mahindra, IT stocks have recovered. Infosys, TCS are the ones which are also showing signs of recovery. So I think and also the banking index, which is down, I think 150 points, Bank Nifty, that's also seen some recovery led by few private sector banking names, the likes of ICICI Bank specifically. Okay, yeah, I can see ICICI Bank, Axis.
They've seen a mild bit of recovery, SBI at least trying to nudge up into the green again, and HDFC Bank has flattened out since. We'll take a very quick break. Then on that note, before that, let's get in some closing trades as well. Kunal, you go first. So there'll be a buy on Wipro. I think after the stock getting to a breakout in the last 2 days, it's completing a inverted head and shoulder pattern just about that 530 plus mark. So looks interesting for a potential target of at least 40 points from current levels. Okay. Naresh, what about your closing ideas?
So that would be a buy on ITC. The stock has been in a range of say 496 on the downside, 508 on the upside. Came very close to the breakout today. Could be breaking out in the next couple of sessions.
Let's take a very quick break. When we come back, the last lap of today's trading.
Welcome back. In the green for now, and a sudden shot up at that. I mean, look at that graph, and you should probably try and pull up the candlesticks. And I think this is the 3 p.m. move perhaps that we always keep on talking about. It's come in a little earlier than 3 p.m. itself. We haven't hit the mark of 3 p.m. yet, but there's that big candlestick that has emerged on Nifty right now. If we can, let's try and break down as to what within Nifty is actually powering ahead. It is, at least at the index level, it is Bajaj Finserv Finance which are leading the charts. Britannia is doing quite well, and in terms of the heavyweights, ITC is something that deserves mention. Any comments, Kunal, on the kind of up move that we are witnessing, and clearly that 3 p.m. move that we all talk about?
Yeah, this is the expiry move, and this is what generally happens pre the expiry or the start of the last half an hour on the expiry day, where you see the action shifting back towards the indices. Because in the first or in the major part of the session throughout the day, the index was literally listless. We were seeing into a 40-50 point band for the Nifty plus minus, but then the last 15-20 minutes we've seen a 150 points plus recovery for the Nifty, and it's come back about that 25,100, 150 levels. A lot of large cap names which have aided the move for the indices, whether it's Bajaj Finance, Finserv, the comeback from private sector banking names, IT stocks which have been doing pretty well, as well as many of these FMCG stocks, even they've started to contribute.
Naresh, do you see an extension of this move, that 3 p.m. move that we talk about? Does it mean that from here on we are likely to pile on further gains, 25,200 perhaps today itself?
Looks very possible because we have Reliance holding on, so the rest of the names need to just take a little take up. And we saw a downtick happen of 100, 150 points that has been fully covered. So the bias becomes positive for the next half an hour and even for the next couple of sessions.
Okay, let's bring on board Sudeep Bandyopadhyay as well and talk about what he's making of the market right now. Sudeep, still underway for the Reliance AGM. They're looking at doubling their revenue and EBITDA for the Jio platform in about 3 to 4 years. The market, of course, is excited with that. Ahead of the AGM, as soon as the bonus share announcement itself came, you had the stock spike up about almost 2%. But what are you anticipating? What could be more meaningful that the street is anticipating realistically from the AGM today?
Well, definitely some positive announcement on the new energy business. I think that's one area which the street would love to hear concrete plans and timelines. I think that's very important. The second thing, which of course the market has been talking about for a very, very long time, has been the demerger, listing, or whatever other strategy they have regarding the two businesses which are reasonably mature, Jio platforms as well as retail. I think these three pieces of information is going to be critical, and definitely the market will be watching for that till the end of the speech. The announcement of the bonus before the AGM was definitely a positive sentiment booster. I think whatever little I heard, there is a lot of talk of AI going on there, and how AI is going to change the way service delivery is happening, and the way the customers will be benefited. I think that's what has been the theme till now as far as the Jio platform is concerned. Let's wait and watch for further announcements, if any.
Oh, well, yes, that green energy focus is something that one really needs to watch out for. But right now, a big headline coming in for Jio, at least, wherein they're targeting doubling the revenue and EBITDA over the next 3 to 4 years. So that's the big number that we're tracking right now. What else is happening in the markets in the last few minutes? Yes, that perk-up has happened. It's coming in on Tata Motors as well. Hindustan Copper, Timken India, Bosch, these are some of your names. So auto OEMs, manufacturing as a pack is actually picking up. On the losing side, however, you do have KEC giving up, Indian Bank, India Mart, Castrol India. These are some of the names which are in the red right now. Sudeep, it's that time of the month that we start discussing the auto sales data, and if you go by the early indications, it doesn't look like there's going to be a big recovery, at least this month. What's your take on autos right now?
Couple of things. I think to expect anything great in this month will be a little unrealistic, Manisha. I think we have to look for the next couple of months. Festive season kicks off from September in its right earnest, and we'll have to watch for the numbers in September, October, November. That's point number one. Point number two, I think there has been distinct signals of rural recovery, which came from the FMCG numbers. And I believe that the auto companies focused in rural India has a chance of posting better numbers. So I'll watch out for the Hero MotoCorp numbers, definitely. I will also be watching the Maruti numbers quite closely.
Okay, point taken. So that's the view coming in as far as the auto sector is concerned. But the Global FinTech Fest is underway right here in Mumbai, and we have seen whole host of speakers, in fact, coming together to talk to us about what the financial ecosystem is looking like in the country. In fact, with much ado around UPI after RBI Governor Shaktikanta Das said that they want it to be truly global. My colleague Ankur got a sense as to how the ground reports are turning out to be. Let's take it across and hear out what's the latest that Ankur is picking up.
We are at booth of Google Pay at Global FinTech Festival, and one of the new things which has been launched by Reserve Bank of India governor recently has been UPI Circle. Now, what is UPI Circle? Suppose there is a situation where you do not want to give wallet to your kid or your spouse, but now by adding them into the circle, they can be making the payments of UPI. Yes, that is a feature of UPI Circle. There is also a demo team with me which is standing here. These are the two phones. For instance, there are two users. The user 1 is having the primary authorization of payment, and user 2 is taking the instruction. So by approving the authorization of user 2, the user 1 can add them to the circle, and later on at their own convenience the user 2 can make the payments. So by adding into the UPI circle, you can enable other person to make payments. They don't need to send any photograph to you of QR code for making payments, but instantly that payment can happen only by authorization of the primary user. Apart from that, there is also a feature of enabling a monthly limit, so that even without your presence, the secondary user can make payments, can use UPI, but that monthly limit will be decided by you.
Okay, that's a snippet coming in from the Global FinTech Conference currently underway in Mumbai. In the meantime, let's just revisit where the market is going, because we are definitely seeing quite a bit of recovery actually played out from the session lows. In fact, a good 0.5% higher, 25,185 is where we're currently at. 4% of an uptick coming in for Tata Motors. I think we should bring up the intraday graph, because there is a sudden spike up in Tata Motors too. It's shot up, in fact, over 4.25% right now. So big move coming in there. In fact, it's overtaken a Bajaj Finance and Bajaj Finserv too, which were the leaders as of now. There's Bajaj Auto also, which is holding out very well. Maruti. So sudden energized move across the auto pack right now. Sudeep, you think that bit of consolidation and a bit of a dip that played out when these auto companies started doling out discounts, and there were concerns around whether this is also an indication of a demand slowdown whatsoever, you think that period could be well over? And is there merit in then looking at autos again, or do you think they may have peaked out for the interim?
A couple of things. I think last few months definitely were the off-peak seasons, and during off-peak seasons, the dealers are saddled with inventory, and to get the inventory out, a lot of discounts are offered, and this is the usual practice for this part of the year. So I'm not too perturbed with that. What is more important is how the sales pick up during the month of September, October, November, December, because this is the period where the festive season and the good season for selling vehicles is coming. We'll have to wait and watch how things pan out during the next few months. As far as overall scenario is concerned, as I mentioned, rural demand is definitely picking up. There are green shoots, and if that holds, I think we will see a good festive demand for vehicles, and that should be music to the ears of the automobile companies. Now, the specific question of buying the shares of these companies in the market, I think it will to a great extent depend on the valuation at which they are already quoting, because a whole lot of things are already factored in these valuations, and the margin of error at such high valuation is very, very limited. If I have to pick a stock, and again, I'll go back to my rural demand theme, I think I'll go for Hero MotoCorp. Even valuation-wise, I think it's looking little reasonable. So amongst the two-wheelers, Hero MotoCorp will be my favorite at this stage, sheerly because of the valuation comfort we have there. Bajaj, for a long-term investor, is good anyway. They're doing all kind of good things, ticking all the right boxes. As far as four-wheelers are concerned, I'll be a little cautious at this stage, not because of anything else but the valuation. I would rather play the auto sector through auto components, auto ancillary companies, and that's a place where the opportunities are much bigger, according to me, at this stage.
Okay, so that's a point coming in on autos. In fact, Tata Motors, that move is something that is really taking the breath away. Nuresh, what's the view on Tata Motors, and anything that explains the move on the charts at least?
So it looks like more like an expiry tick, nothing consequential as of now. But if it sustains above the 1140 mark, that would be a short-term breakout. The gap down would be covered. So overall, the longer-term trend is positive. In the short term, we need to see tomorrow if the price action holds on.
Okay, so that's the view coming in on Tata Motors right now. But for the index, it is holding on to decent amount of gains. Yes, there has been that bout of volatility that kept on creeping up. 25,150 is what we are watching out for. Though M&M is your top loser, while Tata Motors is the top gainer. Amnish Agarwal of Prabhudas Leela also spoke with us earlier today, and he talked about how he's looking at some of these new age tech companies, whether Ola, First Cry, etc. Hear out what his recommendation on some of these stocks are.
If you look at, say, Ola Electric or your First Cry, I think particularly in case of Ola Electric, the up move has been very sharp because the stock was offered at, I think, 75, 76. After that, it went all the way to 140, 150, and now it is around 125 or so. I think in some of these stocks where these are, you can say, relatively, you can call them new technology companies, I think we are going to see a lot of volatility, at least in the near to medium term, till the time there is some sort of stability which comes in terms of operations as well as in case of financials. So I think as far as IPOs are concerned, I think it is time to be very cautious given the way the valuations are there. Plus, particularly in case of the companies which are technology-led, I think one needs to be very clear because the initial volatility can lead one to take, you can say, exposures at higher levels.
Right, okay, that's, the take coming in from Amnish Agarwal on a couple of these recent listings. Sudeep, anything recently from within the IPO pack that you may have actually picked up or even looked at?
Well, I've looked at Ola Electric, but I think that's one stock which I don't recommend buying at this stage. It's run quite ahead of its numbers. Of course, the potential is there, and we have to see how far the potential is realized. One has to remember a couple of facts. One is, electric two-wheeler is a very, very small segment as we speak today. They are getting into motorcycles, which is 2/3 of the market as far as IC engine is concerned. But one has to see, and one has to also remember that globally, two-wheeler EV hasn't yet been a success. So we'll have to wait and watch. They are doing the right things. At least the talk is absolutely bang on. Setting the battery plant is a good step and in the right direction. But one has to see how these things pans out and how they're effective in increasing the margin because globally also battery prices are coming down sharply. Now, under the circumstances, one has to wait and watch. So I will advise investors to wait instead of rushing into Ola Electric at this stage.
Hi, Ola Electric, 120 is where the stock is currently. I want to bring up Paytm as well. They've got the government nod finally for the downstream investment in the payments arm. That stock has been largely holding on to its gains and currently about almost a 3% or so kind of uptick. Sudeep, you think the cup of woes is now over for Paytm, and is it now finally out of the woods, or would you still be circumspect?
I think the issue with Paytm, as far as I'm concerned, is different. I think they have to really find a business which is working. And they have to stick to that business. I think multiple businesses they have dabbled in, and somehow they haven't given them the result they were looking forward to. At this stage, also, I'm not sure what is going to be the main business. Is it going to be the loan distribution or something else? One doesn't know. They are trying to do all kind of right things. They sold that platform for ticketing, and that probably was a right thing to do because they didn't have much focus there. But I will still hold my judgment on Paytm. It's still a very highly valued stock, and at this valuation, I don't think it will be justified to enter Paytm at this stage. Yeah, they've got some approvals. They've also had a lot of disappointments vis-a-vis regulators in the recent past. So I'll wait and watch. I don't think I will get into Paytm. If I have to get into some of the new age platform businesses, I will look at delivery. I think it's not yet in fashion, but I think they are ticking the right boxes. Post-listing, there were a long period of underperformance, but I think the green shoots are visible now, and one should look at logistics as an evergreen business. And things are picking up at delivery, and if they're able to effectively digitize the parcel, PTL as well as the express parcel business, I think the potential is significant.
Perhaps in some of these businesses is really significant, but it seems like people are eyeing the potential of the jewelry business now, because after the Aditya Birla Group announced its foray and set up its first jewelry showroom, you have now the statement coming in from Ms. Isha Ambani of the Reliance Group that Reliance Retail is also looking at entering into the luxury jewelry segment as well. So that means more competition for the likes of Titan. Let's pull up if there is any impact on that stock. And then of course they're talking about how they're looking at doubling the retail business in 3 to 4 years. So they talked about doubling Jio revenue and EBITDA in the next 3 to 4 years, and they're also talking about doubling the retail business in 3 to 4 years. Not sure if it's having an impact on the rest of the retail pack, whether ABFRL or Trent for that matter, even Raymond Lifestyle for instance, which is going to be listed on the bourses soon, plus the other lifestyle retail brands, maybe increased competition for this whole lot. So the Trent is that interesting case. The valuations just keep on inching up. 115 times is what my colleague told me at the last count, but still continues to see buyers. Today, of course, the stock is a bit soft, but is there no merit in perhaps booking profit? How does one decide on a stock like Trent whether to book profit, if at all, or not?
Well, I think they have multiple engines working. Zudio changed the game for them, and they are expanding that franchise rapidly. And quarter on quarter, in spite of whatever we say in terms of valuation, they're beating the market expectations and creating a scenario where all the predictions about their performance are being beaten on a continuous quarter on quarter basis. Now they're apparently, in terms of the newspaper reports, they're focusing on their grocery retail Star Bazaar business. And, that's another area which has a potential of a significant scale up. We'll have to wait and watch. I mean, it's not for the faint-hearted, I must say that. At 115 times, it's definitely not for the faint-hearted. But somebody with a long-term horizon and patience, obviously, patients can look at entering, because all analyst expectations are being beaten. But I would like to probably look at a different strategy. I would say that look at Aditya Birla Fashions. I think they had a similar bunch of businesses at one point of time, and where ABFL has lagged much behind. Trent has moved ahead significantly. The pantaloons, as well as the potential to take the brand in a big way ahead, is significant, and the valuations are, of course, comparatively much reasonable. So, one little aggressive investor can look at ABFRL as well.
Right. Okay. That's, of course, Trend for you. The latest to be entering the index. Other than that, can't take your eyes off from Tata Motors and the spike up that stock is seeing. There's ITC, there's Britannia, there's Bajaj Auto, Maruti. Reliance, of course, has eased off a little bit from the top of the day. It's no more that 2% spike that came about when the bonus issue got announced, or the fact that they're going to be mulling a bonus, although the quantum is already out there. There's Bajaj Finance, Bajaj Finserv still holding good. There's Apollo Hospitals, Bharti, Wipro, Techem, Unilever. So a little bit of largely you'd have to say consumption and IT seems to be the flavor, and across the board consumption, not specifically to autos, but even FMCG. Other than that, banks, they continue to underperform, and so does actually M&M. It's really sticking out like a sore thumb from within the auto pack right now. So after those 3,000 plus levels, it's fallen all the way to 2760 as we speak right now. Kunal, what do you read on the charts of M&M? Because it's showing very distinct patterns now.
Yeah, but I think it's still going through a time-wise consolidation. The stock made a high in the month of June at around the 3,000 mark. From the last 2 months, the stock is stuck into a 250, 275 odd point range, from 3,000 as a high towards 2675 approximately as a support for the stock price. And when you look at the indicators have started to plateau. The volumes have dropped down. Now, after a uptrend, when the volumes pick up, if the stock suddenly gets into a zone where the volumes drop down and the trading activity starts to become more range bound, we call this as a time-wise consolidation for the stock. and that's a natural course of price action which happens after a steep rally into the stock price. I would probably believe that that's a healthy sign for a stock over the near term, and that's why you're seeing the auto stocks in the last 2-3 weeks is also getting into a zone of underperformance. I think except for a couple of stocks like Tata Motors or maybe Bajaj Auto, which have moved up higher, I think most of the other auto stocks, larger cap fronts specifically, I think they are the ones which are going sideways. So I would probably believe that that could be a healthy sign. Maybe over the next few weeks, if the stock dips down to say 2650, 2600 levels, that's an opportunity to chip in or accumulate further.
Okay, so that's a view coming in on some of these stocks. But come tomorrow, we'll be talking about the MSCI rejig and the kind of flows adjustment that happened on account of that. We will try and get Somit shortly to talk to us about those stocks as well. But apart from that, GDP is going to come out tomorrow. So that's another important factor to watch out for. Fortis Healthcare is going to mull the fundraise. So we are watching out for that stock in the trading session tomorrow as to what the announcement is with respect to that. Trading of Tata Motors DVR shares will stop. So that's another important factor to watch out for cues for tomorrow. One important bit that you need to keep on your radar is Vodafone Idea. Supreme Court has finally decided to hear that AGR matter. The brokerages are saying that for now they haven't factored in a big upside from the clearance of the AGR dues. But if it does come by, that could be a bit of a bump up coming in for Vodafone. We should probably pull up all of these cues together because that will tell you the important things that you need to watch out for tomorrow as well. Prime Minister Modi is also likely to address the Global FinTech Fest, which is happening right here in Mumbai. So the commentary around that, the financials, the fintech, as well as the advancement in technology is something that the market will really keenly watch out for. But it's the day of the expiry today and just tracking the moves as to what we have seen over the last 20-30 days or so. So the Nifty has advanced for third series. Shriram Finance, Bajaj Auto, these are the stocks that have managed to lead in this month. Midcap and the small cap index, of course, hit record high, and individual, sectors like Pharma, IT, FMCG also managed to hit record high in this series. What really was on the back foot was real estate. Nifty Realty Index is down almost 2.5%, and of course, some of the PSU names also lost out. So, Deep, what do you think is happening? Is it a bit of a sector churn that IT, FMCG, Pharma, the underdogs per se of the last 6 months are now making an up move, while the likes of real estate, which saw big moves in last year plus in the first 6 months of the year, is slowing down now?
Well, I think to an extent you are right, sector churn, but there are solid reasons for it as well. If you look at IT, I think with the US interest rate reduction becoming a reality, obviously the fear of recession in US is not there, and with that the question of order cancellation, postponement of work orders and things like that is a thing of the past. And under the circumstances, the IT companies are definitely expected to perform well in the near future. Whenever US interest rates come down, historically, IT companies have performed well. So there is a strong rationale for IT companies to go up. Of course, we can debate the valuations and things like that, but fundamentally, IT as a business should do well in the near future. As far as FMCG is concerned, the reason, again, I must mention that rural demand was really, really weak, and that has now started improving. The green shoots are visible. If we look at Q1, FMCG numbers, some of the companies like Colgate, which has 40% rural business, they showed that things are improving. Look at Dabur results. It was clear they have a strong rural business. So rural consumption picking up should augur well for FMCG companies, and hence the excitement in FMCG. Pharma is slightly different, but again, the generic pricing pressure in US is reducing, and that is helping large Indian pharma companies, which have a strong US business, to start performing better.
Okay, that really is the word coming in, a bunch of sectors which are holding out well. In the meantime, well, Tata Motors is now up 5%, Kunal. 6%, okay. 5% on the futures at least.
I think one of the reasons why this could be because Tata Motors DVR could be stopped trading from tomorrow.
So yes. How does it impact?
No, but that conversion would happen from Tata Motors DVR to buying the parent company Tata Motors. That could be one of the corporate action reasons.
Yeah, no, I was aware that there is that thing happening, but I couldn't connect as to what the reason could be perhaps. So what he's saying is perhaps there could be some trade happening where people are moving out of DVR because it's not going to be liquid enough, and you're buying Tata Motors, which will continue to be listed on the bourses. But in terms of the other big buzzers right now in the trading session, of course, you do have, Sundaram Finance, which is holding up. Hoodco, the management spoke with us earlier in the day. We were questioning them about the big growth that we have seen this year and what really explains the kind of momentum that we are seeing right now. They talked about how they're likely to become an IFC status soon. So that's something which will, augur further well for the company. But time now to take the buy today, sell tomorrow ideas. Kunal, what's the BDSC trade?
So I'll go with the first one, ban ITC, the stock looking attractive towards a breakout, targets of 520, stop loss at 490. And NTPC could be a contra trade. The stock over the last 2 days has seen a mild correction from 415 to 405 approximately. So would suggest a buy with a target of 430. Stop loss could be kept at 395.
Right, Naresh, what about your strategies?
So first would be a buy on ITC, a revised target of 520, stop loss at 496. Second would be a buy on IOC, which has been a relative underperformer compared to the other two names, could break out a target price of 180, stop loss at 175 revised.
Okay, that's the take coming in right now on some of those BTST ideas. Sudeep, I know you've been sort of warning investors out there to be a little watchful when it comes to the PSU pack and in specific your defense railways. But do you think a large part of the consolidation may have played out for some of the railway names because the order inflows are still looking strong? All the specific cases didn't quite deliver in their quarterly numbers for sure, but the stocks seem to be back in the green.
Well, I'll be still, cautious. I think, the common mistake which investors are making or traders are making is that, order inflow is getting equated with, profit delivery or, I really don't know what, because the moment there is a fresh order inflow, the market gets excited and the price moves to even stratospheric heights. I think there's a significant gap between receiving an order and delivering and performing on it. There are costs attached to it. There are cost overruns, time overruns. So there are a whole lot of things. And to a great extent, this will depend on the efficiency of performance. And, in a lot of cases, that's not been demonstrated yet. So I'll be extremely cautious, particularly because of the fact that valuations leave no room for any error. And under the circumstances, it's better to be careful in both defense as well as, railway PSUs. I'm not saying they're bad companies. I'm not saying they are not getting orders. They're having a time of their life. There's no doubt about it. But performance will determine whether they deserve the kind of valuation it is quoting at or not. If somebody has to look at PSUs, I would still recommend looking into the power sector. That is a much better and safer place with most of the power companies participating and performing very well. Their efficiencies are also much, much better. NTPC, the largest power sector company, is a case in point. I think definitely merits a buy from a long-term investor's point of view.
Okay, Sudeep, we'll let you go on that note. Kunal, Naresh, good to have you guys on the show as always. Let me hand it over to Snehi for the closing trades now.
Well, absolutely. Let's take a look at what the trading day has panned out to be in today's trading session. And if you pull up Nifty 50, first of all, it's been a slightly volatile day coming in. Flattish moves coming in, but it was yet another record high coming in for Nifty 50. And we surpassed even that intraday record high, reaching as high as 25,192. But as of now, Nifty at 25,142. So a little away from the highest trading point of the day, but in the positive nonetheless. A 0.3% gain coming in on Nifty 50 towards close. Sensex also in tandem, 0.4% higher, comfortably above that 82,000 mark. 82,100 is where Sensex is. If you take a look at the broader markets, however, they were languishing in today's trading session, yet again underperforming the benchmarks because Midcap and Smallcap, both of these indices, trading with cuts of around 0.5%. Now, the advanced decline ratio steeply in the favor of declines today, so that is something that has weighed on the markets. But if you take a look at the top Nifty gainers today, first of all, it has to be reliance from the AGM announcements coming in, the announcements of mulling bonus issue on the 5th of September, and also other key announcements kept the stock buoyant by about 1.5% today. Other gainers included Tata Motors. Remember, Tata Motors DVR will stop trading at today's end of trading session. It will stop trading from tomorrow. So Tata Motors, on that note of that adjustment coming in, was higher by about 5%.
You have BPCL, Bajaj Finance, Britannia, Bajaj Finserv, HCL Tech and ITC that also supported Nifty 50 in its rally today. However, on the flip side, some Nifty losers. Let's highlight 1.5% lower was where Grasim is, M&M, JSW Steel, Dr. Reddy, Sun Pharma, Kotak Bank. All of these are your top Nifty losers in today's trading day. Let's take a look at some sectoral gainers and losers. You have Nifty Auto that has done pretty well for itself, your top sectoral gainer in today's day, followed by Nifty FMCG. Remember, FMCG is erasing losses to come towards the green today, and you have Nifty Energy, IT and PSU Bank also nominally ending the day in the green. However, on the flip side, what did not do well today, the top sectoral loser today was Nifty Pharma. You also had Nifty Metal, Media as well as Nifty Bank that were not doing pretty well for themselves in today's trading session. However, from the FMCG pack, Britannia, ITC, HUL, Colgate, Nestle, all of these stocks have done pretty well, and IT was also doing well for itself today because you have the names of HCL Tech, L&T Tech, Persistent, all of these trading with gains of more than 1.5%, and Tech Mahindra, Wipro and Coforge also buoyant in today's trading session. So overall, that is what today's trade is panning out to be. Lots of block deals, brokerage actions, order wins, lots to talk about in today's trade. Watch out for Sonata Software, PNB Housing, Vodafone, REC, PFC, all of these were buzzers in today's trade. But well, we're ending the trading session with Nifty almost 0.5% higher, comfortably above 25,100 is where we've ended the day.